Thank you everyone for joining our webinar. Today's topic is step-by-step guide to checkbook controlled solo 401k or self-directed IRA. My name is Natalie with Sense Financial, and we are a boutique financial firm specializing in self-directed retirement accounts with checkbook control. I am joined here by Brett Zieninski, who is our speaker today. And Brett is a solo 401k and self-directed IRA consultant here at Sense Financial. He has a professional journey spanning over 18 years in real estate investing. Brett is a licensed California real estate agent, and his passion lies in empowering people to attain financial independence, affording them the possibility of an early retirement. So thank you, Brett, for taking the time to present today, and I'll let you take it from here.
Thank you, Natalie. Appreciate it. Can you hear me okay?
Yes, sounds
awesome. All right. Yeah. So that is me. And just real quick disclaimer, we are not a fiduciary. We don't provide legal or tax or investment or other professional advice. If you do need such advice, please seek out that competent professional. And today's subject is a little bit different. We're going to focus on some of the benefits of the checkbook controlled 401k and IRA. And then I'm going to get into the actual process of establishment and maintenance as well, which is a little bit different from what we normally do. So let me dig into it. First off, our mission is to help clients obtain control of and protect their retirement account. Proverbs 21:5 says, good planning and hard work lead to prosperity. And you work hard for your money, and we want to come alongside you and work hard for you on your behalf in providing a vehicle, either in the IRA or 401k, that will allow you to hopefully lead to more prosperity. Well, first off, why should you listen to us? Well, first off, we have a lot of clients. We have well over 3,000 clients. We've established over 4,000 accounts for, and our number one referral source is our existing clients. And so that tells us that we're doing something right, because not only do they stick around, but they also send their friends, their colleagues, their family members in a lot of cases to us when they're interested in self-directing their retirement. We also have a lot of 5-star reviews: Better Business Bureau, Google, Trustpilot, Yelp. And so I encourage you to do your own due diligence on that and check them out. And I do want to read a couple of ones that we got towards the end of last month on Trustpilot. The team, this is from T. Jackson, the team at Sense Financial is always quick to respond, professional and thorough. I've enjoyed working with them for over 5 years. And then another one from Zahua Zoo. They are amazing. I am very impressed is the topic, the title. I am very impressed with Dimitri, that's the founder of our company, and his team's knowledge and responsiveness to my questions. They have a large amount of detailed information regarding the solo 401k. I am very happy with them. So this is a solo 401k client. And so I just want to point out one of the biggest differentiators between us and our competitors is customer service. And I realize that sounds cliche. I really, truly do. Everybody is going to say that they're trustworthy and that they have good customer service. And, you know, I think that's expected. What's not necessarily expected, and where I believe we separate ourselves from the competition, because our clients tell us this, by the way, I'm not making this up, though we do strive to achieve this, is in response time, ease of getting in touch with us are some primary areas of which clients tell us we separate from the competition, whether they come from them as an existing client from that competitor, or they're just shopping around at the beginning and they say, hey, I'm not going to lie, you know, you guys provide the very same vehicle that another company does in the solo 401k or the self-directed IRA, but the differentiator was that I could call you, I could text you, I could email you, and I could get a response very quickly, very easily, without having to jump through some red tape. We're a boutique financial firm. We are not after a ton of volume. We are after a high level of service, and which leads me into the next thing, that we only offer 2 things. We only specialize in 2 things. That's the self-directed IRA and the solo 401k. And we're going to talk a little bit more about those. So first off, you have conventional versus self-directed. So Conventional is that bus that stays on the track that has to go a certain direction. It has to stay on the track. It can't go off. The pickup and drop off is at the same pre-designated locations. That's your conventional Wall Street type investments, right? That's the custodians we all know. Vanguard, Fidelity, T. Rowe Price, Schwab, etc. Nothing wrong with them at all. I've personally had money in a few of those over the years and still do. But they're locked in. You are stuck investing in what they offer: stocks, bonds, mutual funds, and ETFs. On the other side, you have the self-directed side. That's the taking control of that I mentioned in the mission statement. Well, you take control of it by getting into that off-road vehicle that can go off of the tracks, off the street, over the sidewalks if you have to, right? We're not looking to break laws or anything like that. This is all above board, obviously, but you can go just about anywhere, through some water, over hills, over mountains, maybe in some cases, and you're really not relegated to a specific track, designated stops, etc. That's the self-directed side, which is the unlimited investment options. The IRS does not tell you what you can invest in. They merely tell you what you cannot invest in. And that would be collectibles and life insurance policies. Those are the restrictions. So what are the unlimited investment options? Here's a few that our clients are mainly investing in. This is not an exhaustive list because that's not possible to do. Tax deeds, precious metals, crypto, real estate, both commercial and residential, private lending. Many of our clients love to be the bank. Rather, their retirement account is the bank, and they're giving loans out to fix and flippers or loaning to syndication opportunities in multifamily, as an example, and getting a return, all in a tax advantaged account. And so those are just a few of the examples of what our clients do. As I mentioned earlier, we do two products. We help people set up a self-directed IRA or a solo 401k. And the reason for all the people on the left there under the IRA is because anybody can set up an IRA. Typically, they're rolling money in because the annual contribution limits are $7,000, under 50, $8,050 and over. So it takes a lot to build up to enough to invest in alternative assets, though there are certain fractional type investing in real estate that you can do for as low as $5,000. And so it doesn't take that much to get started. But most people want to do more than that. They want to put in 50 or 100, as an example, into a syndication, or at least a down payment on a residential rental. And then on the solo 401k side, that is primarily for the solopreneur, the business owner and their spouse. And so that's why you see the couple there on the right. So first off, we're going to just briefly talk about the Checkbook IRA. How does that work? Well, the first step is when you say, hey, I want to open this Checkbook IRA, which means you have checkbook control. I'll talk more about that. We open a new account with an IRS approved custodian. They're still a custodian. So the Vanguard, Fidelity, they're a custodian. They will not allow for alternative asset investing. So we have to use a custodian who allows for non-Wall Street type of investments. So that's the new account with the IRS approved custodian. Once that's done, a transfer will be set up from the existing retirement account, the existing custodian, whether it's an IRA, 401k, 403b, any type of qualified retirement account or QRP, qualified retirement plan, into the new self-directed IRA. That will be set up, and it'll go from there to the IRS approved custodian into your checking account. And then at that point, we start to establish the LLC, which is a special purpose LLC designed to be owned by an IRA, of which you are the manager. It's a single member. The member is the IRA. You're the manager of it, which gives you the check writing authority, the signing authority. And so with the checkbook, you're able to bypass the custodian. We only do checkbook controlled retirement accounts. There are other companies that do custodial accounts where you don't have checkbook control. You go through the custodian for everything. That can, in some cases, mean more transaction fees. It can mean, in all cases, longer processing time because you have to submit what it is you want the custodian to do, whether it's sign an offer to purchase real estate or a transaction you need done. And you do that, and then a little bit of time goes by, a day, to whatever it is, and then they get back to you as a custodian. With checkbook control, you bypass that whole process. So it's a lot simpler and easier and quicker to manage. So this LLC is what gives you that checkbook control, that ability to do that. From there, step 4 is the bank account is funded, actually. So again, the transfer goes from custodian to custodian. Once the LLC is opened, the bank account is opened in the name of the IRA LLC, and then the funds go from that new custodian into the checking account, into that bank account. And then from there, you're able to make investments. All the income, all the expenses, everything must go into and out of that checking account. It's important that you don't do any commingling. We'll talk about just very briefly about prohibited transactions here in a little bit. But essentially, that is the checkbook IRA process and model. How does the solo 401k work? Well, as I mentioned, it's for the solopreneur. It's for the and their spouse. One of the restrictions is you have to have legitimate self-employment activity. So you can be a sole proprietor, corporation, LLC, or partnership. Legitimate self-employment is not a hobby. It is a actively earned income. Flipping houses is an example. Property management is an example. Real estate agent is an example. All these people we have a lot of clients of in those categories. We actually also have a lot of clients who do contract work as doctors. So they might even work for a hospital, and then on the side they do contract work, 1099 type independent contractor work, and so they qualify for a solo 401k. They don't have any W-2 employees outside of themselves and a spouse working more than 500 hours a year, which would disqualify you from the 401k because, the solo 401k, because the IRS says if you have full-time employees, you have to offer them a 401k as well. And it's no longer solo at that point. It's a traditional type employer-sponsored 401k plan. So you have the plan sponsor, the adopting business sponsors the 401k, the plan and the trust is created, okay? And the 401k, technically speaking, is a trust. So there's a trust involved in this, and you are the trustee of the plan, which gives you the checkbook control and allows you to, so all the assets are in the trust, right? All the cash, all the real estate, all the cryptocurrency, whatever it is, the brokerage accounts, because, and I'll touch on this briefly, you can actually, one question that a lot of our clients ask is, it's a regular checking account, right? For both the IRA and the solo 401k. I want to transfer money in because I want to be able to pull the trigger on an investment, but I don't really want my money sitting in a checking account that earns 0.02% interest. So technically it is an interest-bearing account, but it's nominal, so it might as well be kind of not interest-bearing. What do you do? Well, what you can do, and what some people do, is they open up a non-custodial brokerage account in the name of the solo 401k, and they move money, just wire transfer from the checking account into that non-custodial brokerage account at Vanguard or Fidelity or wherever, and invest it in the money market. It's safe. It's getting more than 0.02%. And when you're ready, you can liquidate that, move it back into the checking account with the 401k, and then you can start to make investments. And by the way, I know Natalie said it at the beginning, but I just want to reiterate it. I will give some time for Q&A at the end. We do have a hard stop at 12 Pacific, but we'll give plenty of time for some Q&A. And then from there, the checking account is opened, and then you're able to move the money from an existing retirement account, 403b, 401k, IRA, into the solo 401k checking account, and then start to self-direct. One of the benefits, and same idea, the money must go into and out of the checking account. The checking account for both the 401k and the IRA is the home for the money until it's deployed into some type of investment, okay? Let me come back to that. So just to briefly touch on the prohibited transactions, and disqualified parties. So you, your spouse, your children, your children's spouses, your parents and your grandparents, the lineal descendants, and then of course your spouse, are disqualified parties. And what that means is that you cannot personally benefit, none of those people can personally benefit from the plan. In other words, if you're doing work on behalf of the well, first off, let me back up. You can only do white collar work for the retirement account. You cannot do blue collar work. What does that mean? Well, easy way to say it is you can hire the person that swings the hammer to fix something at your rental property, excuse me, at the 401k or IRA's rental property, but you can't swing the hammer yourself. That's the easy way to say it. Another example is as a licensed real estate agent, I cannot uh, provide those services to the retirement account. I can't represent it on a purchase or a sale. I would have to use a third party agent. And none of those lineal descendants could do that for two reasons. One, I'd be compensated. And two, I'd be doing non-allowable type labor work on behalf of the retirement account. So I just wanted to touch on that really quick. And then what I want to spend probably the majority of the time here talking about is our client portal. It's not as exciting as walking through this portal and going into some other dimension, but it is a client portal that you can log into, and you can actually get well, let me just share that instead of this, and then I'll show you guys exactly what I mean. I think you'll like this because this is a preview of what all of our clients have access to, and I'm going to talk about the setup process as well as the sorry, I'm not a good multitasker. Here we go. As well as the maintenance of it. So this is the Solo 401k client portal. The IRA portal is similar but different because it's a different product, but a lot of the principles will still apply. So you have the setup. So when you become a client of ours, again, in the setup for the 401k is about 4 days. It takes about 3 to 4 weeks for the IRA LLC. But when you get in, the first thing you're going to do with the 401k is you're going to click start here, and you're going to see a video. I'm not going to play that right now. We don't have time, but you'll see a video from our team with just navigating the client portal as a whole. I'm basically showing you that right now. And then your first step after that, which kicks off our setup process, is going to be completing the client information form. So there is a video about your responsibilities, terms and conditions, etc. And then you'll go in and you'll click client information form. That'll take you about 10 minutes to do. It's going to ask questions like your name and your, contact info, what type of accounts do you have that you're going to roll into, what are the balances, who's the sponsoring business, etc. But again, 10 to 15 minutes, give or take. If you don't have an EIN number for the sponsoring business, you will need to get one, but we instruct you in that process of how to go on the IRS website and grab one, and it only takes a few minutes. Once you complete the client information form, it's a little bit of a waiting period. We're going to start to put together the plan documents, the adoption agreement, the trust, and then we're going to instruct you to go to step 2. So you won't do that until we instruct you to do it. So you'll go to step 2, rollover, and from there you'll actually be able to follow these instructions, and then you'll be able to, if you're moving them from an IRA, you're going to follow those instructions. We have a form that you'll fill out. Oftentimes the existing custodian has their own form that they require. That's okay. You'll fill out theirs as well. And then we have some instructions that you can provide. It's important that you make sure this is a direct rollover and this is not a distribution, obviously. So because of that, we're going to suggest that you request an actual paper check and not a wire transfer from custodian to bank account, because we want that paper trail. And so if the custodian accidentally processes it as a distribution instead of a rollover and you get a 1099-R at the end of the year, you're going to have to deal with that. Actually, it would be into the new year you would get it. You have to deal with that. You got to fight them. If you have a copy of the paper check that says it's made out to, ABC 401k plan, well, that's all the proof you need that it was always from the beginning intended to be a direct rollover and not a distribution. So it's easier to fix at that point. If it's a wire transfer, you don't have that paper trail. And the bank, Titan National Bank we use, allows for up to $1 million mobile deposits. So it's not often somebody rolls $1 million or more dollars into, or more than $1 million into their 401k in one shot. So you can very easily do a mobile deposit to get that money, that check from the current custodian, those funds into the new solo 401k checking account. So I just wanted to explain that real quick. And then more instructions on how to move them from an employer sponsored plan and that sort of thing. So that is the setup for the rollover. And then step 3 is actually the bank account setup. So we will initiate at Sense Financial, we will initiate the bank account setup with Titan National Bank, and then it's up to you to finalize it. They'll need to verify your identity and such. They are located in Texas, but they're national. They do everything. You don't need to ever go into a branch. Their mobile app is fantastic. Their customer service is great. They offer free wire transfers, both inbound and outbound, up to 25 per month domestically. So at other banks, those are $30, maybe $40 a pop. So it's beneficial to go with them, and we have a relationship with their management team. So if there's anything that ever needs to be addressed, we can handle it very quickly. So that is the bank account setup. Now within this setup, step 3, you'll actually see, if you see that, it says brokerage account setup next to it as well. So that is if you want to do what I mentioned earlier, where you want to open a non-custodial brokerage account in the name of the solo 401k, so that your money is just not just sitting in the checking account getting 0.02% interest. You will also come in here and follow the instructions on setting up the brokerage account, and we have instructions specifically for different brokerages that you can go to and follow those. And it's very, very simple to do. As far as maintenance goes, if you have more than $250,000 of total plan assets in your 401k plan, you will be required to file Form 5500 EZ. It's a 2-page document. Essentially, you're saying, here's the value at the beginning of the year of my plan. This is cash and assets all combined. And if it's a husband and wife, it's the total plan assets. So it's, even though you have your separate accounts within the 401k, it's the total assets of both of those accounts for both the husband and the wife in that situation. And also Roth and traditional, because one of the benefits I didn't mention was with the 401k, it has a Roth component built in, right? So there's traditional Roth, you can make contributions up to $69,000 a year if you're under 50 into the solo 401k per person from the sponsoring business revenue and payroll. And you can actually double that for 2 people, right? For husband and wife. And so those total plan assets are part of the 5,500. And then there's miscellaneous forms, participant loan, because the 401k allows for an up to 50,000 or 50% of the total plan balance value to be used as a participant loan for any reason. So those disqualified parties, prohibited transactions that I very briefly touched on are not part of the participant loan, because once you do that loan, you move the money from the solo 401k into your own checking account. That's your money to do whatever you want with. So that's a way to get around those prohibited transaction rules. We do have a contributions calculator that can be very helpful if you're thinking about I should share this tab instead. Okay, so if you're thinking about what kind of contributions I could make, and let's say you're an S corp, net income is total payroll. So you pay yourself $100,000, and let's say you're 49 years old, you're going to be able to click view report, and it's actually going to show you, the total amount that you could contribute. In this case, would be up to 48,000, and it even compares the SEP IRA, the simple, and then profit sharing. So it's pretty cool actually to see that. So that's the contributions calculator. And then non-recourse financing. Contributions calculator, non-recourse financing is available on our customer-facing website as well. You can go in there under Solo 401k and see those as well up there. Education is just more education, exactly what it is. More information on the prohibited transactions, our video library, conformance. Conformance is case law and such. So if you wanted to review case law about different happenings and different issues that people have had that kind of establish the rules and the guidelines, you can go in there. And then the knowledge base is really, really important, because in the knowledge base, there's, I don't know how many, a lot of different topics. So you can click on the category and you can actually see, 38 different articles on funding, 22 on contributions, 17 on rollovers. But you can also search keywords. So let's say you wanted to learn about Roth conversion. You can type in conversion and it's going to take you straight to the article that actually, talks about that. So, and then you click into it and it tells you, and then there's forms you can download to fill out the Roth conversion form. And that's just one example. So there's well over 100 articles in here of different things. And that knowledge base, of course, is available 24/7. And let's see what else. I think that's pretty much it on the client portal. Yeah, that's just the process. Yep. So that's pretty much it on the client portal. Let me switch back to my other screen here. Oh, I am so sorry, guys. I just realized I was still sharing the contributions calculator. My apologies. Oh, you guys didn't see the knowledge base at all. Okay, I'm gonna have to run through that again real quick. I'm so sorry. So knowledge base is, you'll see these categories and all these different articles, 17, 22 in each category. But as I was saying, you can type in a keyword and you can go straight to whatever topic that you want to, like performing a Roth conversion as an example. And then there's downloadable tools that you can use. So that's the knowledge base, which is, of course, available 24/7. The education, I think you also missed. There's the overview webinar, which you've likely already seen if you're a client. More information on the prohibited transactions, 5,500 conformance, I already talked about. So that's what that looks like. So my apologies for not sharing that again, but let me stop the share and let me go back to my PowerPoint. Okay. All right. So this next page is just a snapshot, and I'm going to talk a little bit more about some of the details of the self-directed IRA without checkbook control. We talked about that a little bit, versus the IRA LLC versus the solo 401k. As you can see, all of them allow for non-traditional investments, non-Wall Street investments. The IRA always has a custodian. The checkbook control in the LLC and the solo 401k either eliminates or bypasses the custodian. No transaction fees at all for the checkbook control. The IRA LLC does have LLC fees. So depending on what state you establish it in, it's either no fees or there are fees. Like California, as an example, has an $800 fee. But in some cases, we can establish that LLC in another state. Of course, the solo 401k is the only one that allows for that participant loan. And UBIT on leveraged real estate, I'll touch on this briefly. The IRAs are going to have, if you buy a piece of real estate with leverage on it, and you can get a non-recourse loan, we'll talk more about that in a second. The portion of the income that is a result of having the mortgage, meaning if it's 50% down, 50% mortgage, 50% of that income is going to be subject to what's called a UDFI, unrelated debt finance income, which triggers a tax called UBIT. The solo 401k doesn't have that at all on leveraged real estate only. Okay, no UBIT on leveraged real estate only. The IRA does. It's not as scary as it sounds, because it takes quite a bit to get up to. Well, it scales up to 37%, but not until you get to $12,500 of total annual income. However, to get to that $12,500, you first get to deduct expenses, depreciation, etc., on the expenses in that 50% in that example before you calculate the total amount that's subject to the UBIT. So a good example is if you invest in a syndication for at least the first couple years, sometimes even 3, there really is no profit to share. Now, don't misunderstand me. You're still getting deposits from the deal, from the general partners, but because there's so many losses to report in the first year or 2, especially when you factor in a cost segregation, which 99.9% of the time is going to happen, especially on multifamily real estate, you don't have any UBIT to worry about, at least in the first couple, 3 years. If you buy a rental property and you put 50% down and it's a $3,000 mortgage, you're going to have $1,500 of potential profit each month to deal with. But again, you get to depreciate and deduct expenses, et cetera, before you calculate the total profit that is subject to the UBIT. So hopefully that makes sense. It's a little bit of a complicated topic, but my caveat to this is talk with your CPA before you pull the trigger on any specific deal. As you can see, the max contribution limits are about 10 times in the 401k versus the IRAs. So that is a benefit to the solo 401k for sure. No built-in Roth on the IRAs. It's either a Roth self-directed IRA or it's a traditional self-directed IRA. And with the solo 401k, it has the Roth component built in. So the entire contribution of $69,000 or $76,500 if you're over 50 can either be put in as Roth or put in as pre-tax. And I'll briefly touch on the contributions. You're wearing 2 hats being self-employed. You're the employer and you're also the employee. And because of that, you have the employee elective deferral as a contribution. This is the same as if you worked at Walmart and you participated at their 401k plan, right? If you're under 50, it's 23,000. If you're over 50, you get an additional 7,500 catch up for a total of 30,500. Now that is can be dollar for dollar on what you make, right? You can put in up to 100% of what you make, not to exceed 23,000 or 30,500. That can either be done as a straight Roth contribution, meaning you're paying taxes on it that year, no tax upon distribution at retirement, and no RMD requirement, which is cool. Or it can be done as a traditional pre-tax contribution. Some people are looking to reduce their tax liability today, this year. Some people are okay paying that tax. I always say if you can put more in the Roth, the merrier, because down the road, it's going to be, a more merrier retirement, the less taxes you have to pay, right? And then RMDs are required, of course, in traditional funds. And so, yeah, the built-in Roth. Now, on the other part of the way you get from 23 or 30,500 all the way up to 69 or 76.5 is because of the profit sharing. Roughly 20% of the profit of the company or the payroll can be put in as a contribution to bridge that gap, right? So it's a percentage. So the elective deferral is not a percentage, it's dollar for dollar. The profit sharing is a percentage of the total gross profit or the total payroll if you're an S Corp, as an example. And so if you're going to do the Roth contribution on the profit sharing, you essentially do it. It's a business expense for the business. It's always put in as a pre-tax contribution for the business. But if you want to do it as Roth, it's basically like a quick Roth conversion. You take it from traditional funds and you 1099 yourself for that income. And now it becomes, taxable income for that year, and it becomes Roth funds. And so there's a way to do the whole thing as a little bit more steps involved on the profit sharing side to make it Roth contributions, but it's not difficult. You just have to know what your tax liability is. So we refer you back to your CPA on that. And then, of course, the 401k has the self-employment requirement attached to it, and the IRA LLC and IRA does not. So those are the comparisons. So I think that's all. We do have a free ebook if you wanted to check that out. I recommend it, SenseFinancial.com /IRA makeover. You can go download that, and it talks about both the IRA and the 401k. And I apologize, I almost forgot to talk about the non-recourse loan. So non-recourse basically means that the property is the only security for the loan. We have a list of vendors on our website. If you want to check them out, they all have different packages. Some of them are, 5/1 ARM. Some of them are fixed 30-year loans. They're all different. So you can go check them out. They're typically going to require 30 to 50% down, something to bear in mind. And the property needs to cash flow a little bit. And you also have to have some reserves. But it can be a way to really get a super high return on your investment, right? By using leverage, other people's money. When's the last time somebody loaned you money to go buy more S&P 500, right? It doesn't happen. So that's the power of investing in real estate in your retirement account. If you do want to jump on my calendar, you're more than welcome to. Just visit SenseFinancial.com /free consultation. And then at this point, we'll take any questions or comments that anybody has. Natalie, do we have any questions?
We have a comment from Cindy. She said that Fidelity has a non-prototype account for small business retirement self-directed. They will pay interest on the cash balance of the account, currently at 5.15%.
Yep.
And Charles Schwab has one too, but they charge for wire transfers, whereas Fidelity does not.
Yep. So you can use Fidelity or Charles Schwab as the checking account in addition to Titan National Bank, who we use. I think if I'm recalling some of the conversations I've had with clients who have done that, they're big organizations, and so it's just a little bit more challenging to get support when you need it. Whereas with Titan National Bank, it's they've been around since 1907, so they're doing something right. So they have a high level of customer service, but there's nothing wrong with using Fidelity or Schwab for that purpose. But yeah, you're right, Cindy. You can definitely do that.
Well,
All right.
that is all for the questions and comments. So we will wrap up today's webinar. Again, thank you for those of you who joined us today. Again, if any of you listening want to learn more, reach out to us. We'd be happy to schedule a consultation with Brett, and hope you all have a good rest of your day.